All right, welcome. We hear it all the time, right? That AI and all this new tech are the secret to smart investing. We're promised this incredible future of perfect returns and absolutely zero risk. But, is that the whole story? Let's dig in. So let's just get right to it. The big question on everyone's mind. Can this technology actually make you a perfect investor? I mean, can it really wipe out all the risk, all the guesswork? It's a really tempting idea. Okay, so to even begin to answer that, we have to understand what every modern investor is up against. And honestly, we are absolutely drowning in data. We have more information right at our fingertips than any other generation in history. I mean, just look at that number, 14,000. That's roughly how many individual stocks are out there that you could try to research. Just imagine trying to go through them one by one, checking their books, looking at charts. There's just no way a single person could do that. And that's exactly why so many of us feel completely overwhelmed. It's like, how on earth do you find the real opportunities in that massive sea of noise? How do you pick the winners and, maybe more importantly, avoid the losers that could tank your entire portfolio? But this is where technology comes in, and honestly, it can feel like you've been given a superpower. The promise is that we can use these amazing tools to just slice right through the noise and finally make sense of it all. We're talking about all sorts of incredible tools that used to be just for the big shots on Wall Street. Things like stock scanners, super advanced charting software, risk calculators, and entire platforms built just to help you analyze the market. And what this really boils down to is speed and scale. Instead of spending weeks, maybe even months, manually digging into a handful of companies, you can scan all 14,000 of them at once. And you get a list of possibilities in seconds. And it's all about pattern recognition, right? These tools can spot technical patterns automatically, like, say, a stock that's in a nice, clear uptrend, or one that's starting to show signs of a reversal. It saves you a ton of time. There's this great quote from Arthur Levitt, a former SEC chairman, that just hits the nail on the head. Technology isn't some excuse to be lazy. It's an opportunity, a mandate, really, to do more, to learn more, and achieve more. Okay, but here's where the story takes a turn. Just when you think technology has solved everything, we realize the problem isn't the car, it's the driver. And this quote right here says it all. Think about it like this. A high-performance car, say a brand new BMW, is an amazing machine. But is it safe? Well, that totally depends on who's behind the wheel, right? The very same car can be a marvel of safety or a total disaster. People are the real risk. Well, in the world of investing, there's actually a term for this. It's called pilot error. This is what happens when your strategy is spot on, your analysis is perfect, but you lose money just because you clicked the wrong button or typed in the wrong number. A simple little mistake. And this is maybe the most important thing to get. Far from getting rid of risk, these powerful tools can actually amplify your mistakes. A tiny error with a really powerful tool can lead to a very, very big loss very, very fast. The tech isn't the problem. It's how we use it. So, if the software isn't the magic fix, what is? Well, the real solution is having a system. A disciplined framework that guides every single one of your decisions and, most importantly, keeps you safe. Let's talk about the 4-pillar system. So here they are, the 4 pillars. First, you've got fundamental analysis. That's all about the company's strength. Second is technical analysis, the strength of the overall market. Third, cash flow, your personal strategy for making money. And fourth, and this one's huge, risk management, your plan to protect what you have. And this chart, it really shows you the heart of the system. Look, you have zero control over a company's earnings or which way the market is going to go. That's fundamentals and technicals. But you have 100% control over your cash flow and risk management strategies, and that is where you should focus all your energy. So here's the bottom line. It's not about having the flashiest, most expensive software. What really keeps you safe and what helps you stay profitable is having a disciplined system, like a fortress for your money, and sticking to it, no matter what. And that brings us to our final and I think most powerful idea here, taking back control. It's all about making this huge shift in your mindset, moving away from just hoping for good results and toward actively building a strategy to get them. I love this quote from Robert Kiyosaki because it captures this mindset shift perfectly.
See, instead of only thinking about your next paycheck, a strategic investor is obsessed with building their asset column. That's the part of their financial life that actually generates wealth over time.
And just think about how real these areas of control are. You control what you learn. You control the rules you set for your own money. And for every single investment you make, you control your exit plan, how much you risk, and what you'll do if the market goes up, down, or just sideways. At the end of the day, it all boils down to this one simple truth. Technology is not a crystal ball. No piece of software can predict the future. The only thing that truly improves your odds is your own financial intelligence, knowing your system and having the discipline to stick with it. So I'll leave you with this one last question to really think about. When it comes to your own financial future, are you just kind of crossing your fingers and hoping for the best? Or are you actively, day by day, building a system that's designed for success? Because that choice is 100% in your control.